Ask and you shall receive. A few days ago, I did a poll on my channel in the community section, and I simply asked, what video do you guys want to see next? Coming in at number 1 with 47%, and that was a full stock portfolio reveal. So I'm going to do exactly that. But before we get into that, obviously I want to do a portfolio update like always, and welcome back all the new and existing viewers. So year to date, we can see right here that my portfolio is up 47% or $28,000. If you're new here, then we're in a series called Road to 1 Million. And essentially what that is I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You'll be able to see my trades, which are typically weekly. We'll go over some of my dividends, and I'll show you exactly what I'm doing with this portfolio. If that sounds like something you're interested in, then stick around for more videos. But without further ado, on your screen right here is my entire portfolio. This is every holding that I currently have. We're going to be starting top to bottom, going through each, and I'm going to be letting you guys know whether I think it's a buy, hold, or a sell. Coming in at number 1, and that is Microsoft, my favorite company and the largest portion of my portfolio. Unless you haven't been keeping up with the news, then Microsoft has been doing extremely well this year. Year to date, it's up 55%. Taking a look down here at the bottom, we can see that this holding alone makes up $25,000, almost $26,000 of my portfolio. Total returns for this holding is $8,700 or 51%. My average buy-in for this company is $250, and it currently makes up 28% of my portfolio. Now, I have done countless videos on Microsoft, including one very recently, so feel free to check that out if you would like. So I'm not going to bore you with jumping into the financials. This is an amazing company, and it's quite hard to find any financial metric that doesn't look good. With that being said, let's see if it's a buy still. Now, because I do use Robinhood, it gives me an integration with Morningstar so I can see some analyst ratings, and then it'll also give me a fair value estimate. Now, I take these with a grain of salt, but nevertheless, I do still implement them into my investment strategy. So as of right now, they have 90% of their analysts saying it's a buy, 9.4% saying it's a hold, and 0% saying it's a sell. Going down a little bit further to the research report, we can see that they have the fair value of Microsoft at 370. The economic moat as wide, which I agree with, uncertainty medium, which I don't agree with, and the stewardship is exemplary. Now, do I think Microsoft is a buy still? No, I don't. This is a company that I do think is a little bit overvalued at this point, or there's a bit uncertainty in the market. With the new integrations with OpenAI, it's hard to really dictate how that's going to affect the market cap of the company. In previous videos, I had Microsoft's fair value around the 350 mark, and I said that I'll be continuing to buy in as long as it's below 350, and I did just that. We're approaching the 380 threshold, and I'm really not sure if I feel comfortable buying into a company that has such a run-up like Microsoft did this year. If we take a quick look at the valuation section, we can see that Microsoft is approaching a $3 trillion evaluation. Current PE is 36 and the forward PE is 27. At this point, I think Microsoft is a hold, and I'll be waiting for any substantial dips in the market to buy back into this company. Next on the list in my portfolio, and that is SCHD, or the Schwab US Dividend ETF. Currently trading at $71 per share, and it's currently down almost 6% on the year. So this definitely underperformed the market this year by far. Taking a look down here at the bottom, we can see that this holding makes up $21,000 in my portfolio. Total returns are negative $1,600 or 7%, and it makes up 23, almost 24% of my portfolio. Average buying is $76 per share. Now, for those of you that are unfamiliar of SCHD, it's essentially a low volatility, high paying dividend ETF by Schwab. The ETF has about 104 holdings, and it's broken down into different sectors. As you can see, these are all the sectors by holding size on your screen. Feel free to take a screenshot if you want to look at it a bit closer. As for the top 10 holdings of SCHD, it actually makes up 40% of their portfolio. So those 10 holdings are right here. This list is top to bottom, so Broadcom is number 1, that's their largest holding, at just under 5%. If you're interested in the dividend yield, it is right here on your screen, sitting at 4%. So this ETF definitely pays a healthy dividend every quarter. But I think it's worth mentioning that I hold this in my portfolio at such a large position for a few different reasons. Number 1, it offsets the volatility of my portfolio because I have such high concentrations in other companies. Number 2, it diversifies my portfolio portfolio immediately. I purchased one share of this company and I just bought 104 companies. And number 3, they pay out a large dividend. Additionally, SCHD has typically outperformed the S&P 500 as well. So I feel comfortable parking some of my money in this holding. Do I think SCHD is a buy right now? Yes, I do. It's hard to value ETFs, but when you're looking at this company and the companies that they own, it's hard not to be attracted to it. As I mentioned, this ETF has not had the best year so far, so I think this presents a good opportunity to buy in, park some of your cash, collect those dividends, and look for other opportunities. Number 3 on the list, and that is Apple. Similar to Microsoft, Apple has had a huge run up this year. Year to date, the stock is up 45%. Taking a look at my market value, this holding makes up $21,000 of my portfolio. Total return so far, $6,400 or 44%. And as far as portfolio diversity, it makes up 23% of my portfolio. Lastly, my average buy-in price is $131. Jumping over to Qualtrim real quick, and let's take a look at the valuation section. So again, similar to Microsoft, Apple is now approaching that $3 trillion mark. Current PE is 31 and the forward PE is 28. So that combined with the huge run up this year, I do think this company is now overvalued. But let's take a look at some of the Morningstar estimates. Looking at the analyst ratings, we can see that they have it as a 61% buy, 31% hold, and a 6.8% sell. As for the research report, they have the fair value of Apple at $150. So it's currently trading at $190. They have it at $150. As far as the moat, they have it as wide, uncertainty high, which I disagree with, and stewardship exemplary, which I do agree with. Now, with all that being said, this is an amazing company. For God's sakes, if we look at the max timeline of this stock, it is up nearly 21,000%. And there's a reason that Warren Buffett has it at nearly 50% of his portfolio. It has historically smashed the S&P 500, and it's a very well-run company. With that being said, I do have this as a hold right now. I'm not going to be buying more until I see some dips in the future, or there's new news of a possible acquisition that could raise the market cap of this company, which may cause me to raise that fair value estimate. Now, with that being said, I will not be selling any more of this holding. Apple, Microsoft, and a few others that we'll be covering are definitely core positions in my portfolio. I feel totally comfortable holding this at over 20% of my total portfolio diversity. Next on the list, and that is Visa. Visa is currently trading at $254 per share, and year to date, it is up 21%. So it's underperforming Microsoft and Apple, but nevertheless, it's having a great year. As far as my market value, I currently have this at around $9,000. Current returns so far are $681 or 8%. This holding makes up 10% of my portfolio, and my average buy-in price was $235. So I'm slightly up on the holding, nothing significant, but this is a company I have high hopes for. I do think in the next 5 to 10 years, this will outperform the broader market. Jumping over to Qualtrim, let's take a look at the valuation section real quick, and this is a $500 billion company. Current PE 30 and forward PE of 25, so it's trading a bit higher than most companies. With that being said, if you look at the historic PE of Visa, it typically trades pretty high, so this is on par with their history. The analysts have this as a 81% buy, 18% hold, and 0% sell. As for the research report, the fair value that they have for Visa is $248 per share. They have the moat as wide, uncertainty at medium, and the stewardship at standard. Now, to answer the question of do I think this is a buy, hold, or sell, I'll show you my history with this company for November. November 5th, I bought $3,000 of Visa. November 10th, I bought an additional $500. And November 20th, a few days ago, I bought an additional $1,000. So as of right now, I do think Visa is a buy. This is a very, very well-run company with a highly entrenched position within the market that I think is incredibly hard to disrupt. Not to mention, this is a toll company, meaning they are making money by doing nothing. Somebody swipes a Visa card, they're getting a percentage of it, and that is only a fraction of their core business. So to wrap this up, Visa is a buy in my opinion. Next on the list, and this is the only REIT in my portfolio, and that is Vici Properties. Year to date, the stock is down almost 11%, and it's it's currently trading at $29 per share. As far as my holding size, this holding alone makes up $8,100 of my portfolio. Total returns are negative $370 or 4%. This holding makes up just under 9% of my total portfolio, and my average buy-in was $30 per share. Out of 20 ratings by analysts, they have this at a 90% buy and a 10% hold. If we jump over to the valuation section, we can see that the market cap of this company is $30 billion. Current PE is just under 12 and forward PE is 14. Now, before I say whether I think this is a buy, sell, or hold, I will put the PSA out there that I think this is one of those companies you should do your research on before you buy in. Now, compared to other companies in my portfolio, which there's not many, Vici is definitely on the riskier side. With over $16 billion in debt, this is a levered business, and there's a lot of nuances that go along with that. In addition to that, though, it is a highly profitable company with their free cash flow going up year after year with a huge spike in 2022 because of acquisitions. For those of you that don't know, Vici owns a large portion of the Las Vegas Strip. For that reason, this is a very unique company that has a unique advantage on other REITs out there. Not to mention, the executive team did a great job writing up the contracts for the casinos so that rents increase every year and they can hedge against inflation without trying to alter some of those contracts. In layman's terms, Vici is one of those companies that I'm making a huge bet on for a few different reasons. One, it's really hard to compete with. They scooped up a lot of land in Las Vegas, which was prime real estate, and they have these very long, drawn-out, multi-decade contracts with these casinos that guarantee their rent every month and every year. Now, unless the Las Vegas Strip goes away in the future or there's a huge upset with this company that I don't foresee coming, I do think Vici is a buy. With that being said, this is a company that I'm not going to make a large portion of my portfolio. I'm typically going to be keeping Vici around that 10% or less, just for the reasons we pointed out of uncertainty. But other than that, great company, and I like what the executive team has been doing so far. Last on the list, and that is a company that some may know about and others may not. That holding is United Health Group, currently trading at $543 per share, so a bit more on the expensive side. Year to date, it's pretty flat, only up 3.5%. And this is a new holding of mine. I just bought into this company in late November. I had an initial buy-in of $5,000. I'm currently up $23. This holding makes up 5.55% of my total portfolio, and my average buy-in was $541. If you're interested in seeing a full breakdown on this company, I just put a video out that you can click on right at the top of the screen, and you can see the full inner workings of this company and why I think it is a great investment. But putting my bias aside, let's see what the analysts have to say. So out of 23 ratings, they have this at an 81% buy, a 14.8% hold, and a 3.7% sell. On the research report, they have the fair value of this company at $462 per share, the moat as narrow, which I disagree with, uncertainty at medium, and the stewardship exemplary. Jumping over to the valuation section, this is a $500 billion business with a current PE of 23 and a forward PE of 21. Again, similar to Visa, the historic PE of this company has typically traded at that 18 or mid to low 20s. So I don't have a problem with paying a slight premium above average for this company. Again, similar to nearly all of the companies in my portfolio, United Health Group has outperformed the broader market and the S&P 500 for the last 20 years. Without going into the weeds too much on this company, because I just did a video on it, as I mentioned, I do think United Health Group is still a buy. And not only am I saying it's a buy, but I'm going to be putting my money where my mouth is. I'm going to be increasing this holding till it makes up roughly 10 to 15% of my total portfolio. In addition to that, if there's any substantial dips with this company, I'll be buying in again. All right, that's going to wrap things up. That was my full $90,000 stock portfolio review. I made a lot of adjustments to this portfolio within the last month that I have been documenting. I have been putting up videos about it, and I'm taking this time to high grade this portfolio. I'm only buying into very specific companies that I think have a very unique position in the market and in their industry to outperform their competitors. In addition to that, I'm looking for compounders. I'm looking for companies that can continuously compound their revenue, their free cash flow, and net income while still buying back their own shares, paying a healthy dividend, and making smart acquisitions. If you have any questions about the topics we covered today or potentially one of my holdings, feel free to leave them in the comment section down below. And like always, if you enjoyed the video, you got anything out of it, please like, subscribe, and stick around because there will be more videos in the future. And with that being said, take care. I'll see you in the next one.